Time for business news now. Charles is with us. SpaceX, he's talking about today, has unveiled its plans to list publicly on the US stock market.
Elon Musk's rocket and satellite company will go public on the NASDAQ exchange with a valuation of about $1.75 trillion, most likely on June 12th. Well, the goal is for the company to raise as much as $80 billion in investment with lofty ambitions. In the filing, the company says its, quote, mission is to build the systems and technologies necessary to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars. Specifically, Musk is aiming to build a human settlement of at least 1 million people on Mars, and to build data centers in space, which the filing says could become the largest addressable market in history, worth $28.5 trillion. The CEO, who inspired parts of Marvel's Iron Man character, stands to win as many as 1 billion shares if these goals are met. He also holds a huge amount of sway on the company with the power to outvote anyone else.
I'm sure it'll happen one day. I wonder how soon, though. Amazing. Let's come back to Earth, though, Charles. What's the company's current financial health?
Well, this is really the clearest picture we've ever gotten of SpaceX's accounts, and it shows really a mixed picture. Revenue has been growing steadily over the years, from $10 billion in 2023 to just under $19 billion last year. But that revenue is struggling to keep up with the increase in spending, to the extent that it generated a loss of just under $5 billion last year, and also another loss in the first quarter of this year. Most of that spending is capital expenditure, meaning buying new assets for the long term, which makes sense when you think about the goals we mentioned earlier. Meanwhile, about 2/3 of the company's revenues come from its Starlink business, which provides internet connectivity here on Earth via its satellites, something very popular in areas with low access, for instance in Niger, as you can see on these pictures. Subscribers to the service have gone from about 2.3 million in 2023 to 8.9 million last year.
So goals then of space exploration, there's providing internet access on Earth, but there are other goals too, Sean?
Yeah, in February, SpaceX acquired Elon Musk's artificial intelligence firm, xAI, known for its Grok AI chatbot, making it a big player in this frenzied AI boom we mentioned every day on the bulletin. And the hope is that the IPO will help it beat the competition. Building data centers in space could help fuel that boom and avoid some of the pushback data centers have received from local communities on this planet. The investor prospectus actually lists OpenAI, the maker of ChatGPT, and Anthropic as key competitors to their business. All three of these startups, even if I don't know if you can even call them, they're so big now, are set to go public this year, all with valuations of hundreds of billions or even over $1 trillion, turning this into a blockbuster period for public offerings.
Onto the markets, Nvidia's hotly anticipated earnings report.
That's right. The world's most valuable company posted a strong report card with its data center revenue nearly doubling, but CEO Jensen Huang also admitted it had now largely conceded its China market to Huawei amid geopolitical tensions. After hours, Nvidia stock was trading lower. Let's look at the picture in Europe now. Slightly lower trading at the open in spite of positive sentiment around the Middle East conflict and oil prices easing, but a lot of volatility there, obviously. This is as opposed to the reaction we saw in Asia trading this Thursday. The Kospi rising over 8%, and that's related to our next story.
Which is that one of the world's top technology firms appears to have averted a potentially disastrous shutdown.
Korean tech giant Samsung Electronics had been facing an 18-day strike after pay talks between unions and management broke down without a deal on Wednesday. The dispute centered on bonus pay, as Samsung's records profits amid the ongoing AI boom. The firm accounts for roughly 1/5 of South Korea's overall GDP. It could have cost the South Korean economy some $66 billion in damage. Brian Quinn has the details.
An 11th hour reprieve as negotiators inked a tentative agreement to avert a potentially devastating 18-day strike at Samsung Electronics following mediation by South Korea's labor minister. Unions and management alike seeking to smooth over what has been a hard-fought battle.
We will do our best to stabilize labor management relations at Samsung Electronics.
I want to thank our labor union for their efforts in reaching an agreement and our government officials who provided help.
Samsung is the world's top memory chip maker, and the AI boom has sent demand skyrocketing. Last quarter saw the company set a new record, $88 billion in revenues and $38 billion in profit, far outpacing 2025's full-year results in just 3 months. Workers at Samsung's exceptionally profitable chip division had been set to receive bonuses of some 6 times their annual salaries. Employees in other units, meanwhile, were due for bonuses of just 50 to 100% of their yearly pay. The new preliminary deal will see the company abolish its previous 50% cap on bonuses and set aside just over 10% of its yearly operating profit for bonuses to be spread amongst units, paid mostly via company stock. Shareholder groups, though, are opposed, saying they'll take legal action if the deal is finalized. With chip workers now set to receive more than $400,000 in bonuses, the saga has added to concern over a widening pay gap among South Korean workers, whose average salary is just under $30,000 per year. Samsung and rival SK Hynix together account for nearly a fifth of Korea's total economic output. Their massive profits allow workers there to demand pay packages that dwarf those of employees at smaller firms.
Shall we with business on France 24? Straight to the papers.